Welcome to the Salience podcast, where we identify what stands out from all the noise.
It's my pleasure today to have Dr. Jeff Funk on the Salience podcast. Jeff is a consultant and academic whose career focuses on the emergence and uptake of technology. Jeff is a best-selling author on technology and has taught at several prestigious universities, including 9 years at the National University of Singapore. Jeff's teaching, publishing, consulting, and blogging aims to help individuals and companies navigate the hype and nonsense of tech startups. I first bumped into Jeff last year on LinkedIn, of all places. I don't often find much worth reading on LinkedIn, I've got to say, but I found some genuinely interesting posts on the hype surrounding tech startups. And it's this issue of misleading exploitation that we touch on in our book, Resilience by Design. So I started reading more and more of Jeffrey's work and reading his blogs and starting to think about some of the things that he was saying. I just started following his work and thinking. And I think he's got some really useful insights that are important for resilience, especially if you're an investor, an entrepreneur, or even tempted to dabble in cryptocurrencies. So he's got some great ways of thinking and viewing the world. So welcome, Jeff, and thanks for joining me today.
Well, thank you for having me. So where should I start? You want me to start with my early life?
Yeah, look, I'm really curious to know a little bit about the journey that's led you to the type of critical thinking that you're doing now, and go right back. You know, I'm often curious about, little Jeff, 10 years old, and he's interested in a whole bunch of things. Were you always a tech geek even back then?
To some extent. I mean, I was 13 when America landed on the moon, so that had a big influence on me. My father was in aerospace. He was a executive at McDonnell Douglas, which at one point was the second leading provider of airplanes in the world after Boeing. It provided the MD-10, MD-9. These were best-selling planes for years. And so I grew up with these things, and I was heavily influenced by landing on the moon, and made me very interested in physics. I also must admit that I was very heavily influenced by Dr. Spock on Star Trek. Star Trek ran from during those years, right around there, and he was a physicist. And so to me, well, I had to major in physics. And so those kinds of things influenced me a lot. And I majored in physics in university. I worked for a semiconductor company. But I also have to admit that I was heavily influenced by hype during those years. So here I was getting a degree in physics. There were all these semiconductors doing so well, but they weren't getting the attention in the late 1970s in America. What was getting attention was the oil crisis. We're running out of oil. The Arabs weren't selling this. There was a blockade in 1973, and then there was the Iraq-Iran war in 1979. Oil prices went way up. So I thought, well, this is the issue. It's going to be solar energy. So I decided to go back and get my PhD in engineering with a little bent in terms of economics and public policy. And as it turned out, that was not a very good decision, because semiconductors continued to grow while solar energy did not. Oil prices came back down, and the energy crisis was over. So that also had a big impact on me, because I realized that these things are much more complicated than I thought they were. And I also was a little annoyed that nobody talked about these things. So when I was getting my physics degree, nobody talked about Moore's law. Yet, as it turned out, that was really important, and they didn't really talk about these technologies coming and going, and bubbles and hype. And of course, back in the 70s and 80s, the most recent bubble was the 1929 stock crash. And since then, of course, we've had a lot. We've had the 2000.com. We've had the the 2008 financial crisis, and now we got the current bubble. So these things have become part of our life, and I think it's important for people to understand how these things occur and what drives them, and then once these bubbles burst, a lot of opportunities disappear, and there tends to be a tech slowdown for a while.
Tell me a little bit more about the current bubble, and then I want to cycle back to Moore's law and unpack that for listeners.
Well, the current bubble, goes way back. I always start with Ray Kurzweil's "The Singularity is Near" in 2005, which led a lot of people to believe that we were just in for this great tech ride and all these great products and services. And of course, part of that was Moore's law, which has since slowed. And then in 2012, the book from Benjolson and McAfee on AI, they came out with another in 2014. Then there was Rise of the Robots in 2016, World Without Work in 2020. These books, very optimistic projections. And of course, consultants jumped on these bandwagons. They could see, hey, there's a lot of money to be made here. So a lot of consulting companies were saying in about 2016 that AI was going to have produce 15 trillion in economic gains. And it's important to understand that 15 trillion. The market for AI in 2020 was 17 billion, 1,000 times difference. And why did they make these very optimistic projections? Because by making those optimistic projections, they were able to convince governments, companies to hire these consulting companies as consultants and pay them a lot of money. Because this was going to be so big. So we had these consulting companies have a big incentive to hype everything. At the same time, all of these universities began to start AI programs. Again, this is a great way to make money, a great way to teach courses on AI, blockchain. So that's part of where the bubble came from, is these very, very optimistic projections about the future.
Yeah. In Resilience by Design, we have a really simple heuristic. Follow the money. If somebody's saying something, first question we ask, if they're publishing, if they're blogging, are they making $1 out of what they're pushing? If they are, hang on a minute, put the sniff test over it. So I'm absolutely hearing that from you. So tell me more. You mentioned about Moore's law. Can you break that down? What is Moore's law?
Well, Moore's law is the doubling. Well, it's presented in different ways. Mostly now it's presented in doubling the number of transistors every 18 months to 2 years. But it started up in 1965 in Gordon Moore's article that the cost of transistors were going down. The cost of increasing the number of transistors was going down. And the reason why we were able to increase the number of transistors on a chip was because we were making transistors smaller. And that was important because not only they get cheaper, but they got faster. So the electrons don't have to travel so far. So there was a whole bunch of benefits from making these transistors smaller that then enabled all kinds of new products and services. So they drove the price reductions in computers. They made mobile phones possible, and smartphones possible, video game consoles. Long list of these technologies they made possible. And so that was important. And there was a good reason people followed it. People could see, okay, Moore's law is going to continue. What's going to be next? Now, the problem is that it's gotten harder to make those transistors smaller. So it's gotten harder to increase the number of transistors on chip. Companies still do it, but it's not as economical as it used to be. So actually, it's more relevant to look at the cost per transistor, which is not going down as fast as it did previously. The speed of these devices is not increasing as much. That's been slowing for 15 years because of overheating. So these are technical things that are readily available, but of course, they get overlooked when we get into the hype. So particularly with AI, a lot of the reduced training time has come not from better algorithms, but from Moore's law, from making these, from using more computers. And actually, I shouldn't say it comes from Moore's law. It comes from using more computers, using bigger computers. And those bigger computers cost a lot of money. Moore's law alleviates some of that cost problem, but not all of it. So again, Moore's law has been important, but it's slowing, and so that means that's just one reason why we should be less optimistic about our tech future than optimistic.
Yeah. I like it. Thank you for that explanation, and I can see how that relates to the build up to the hype. I'm really interested now about some of the criteria, the sense making that you use to sift between the hype and the genuine innovations. You began back at the age of 13 being inspired by the moon, which was, let's face it, was incredibly hyped, and it delivered. And then there's a whole bunch of other stuff that's incredibly hyped that just is never delivered. And there's a bunch of stuff now, as you talk about with the current bubble, that's not going to deliver. So what is it that you use to be able to sift between the hype and the, hey, this could be the next thing? What are you looking for? What patterns, what language, what criteria?
Well, there's two things. First, I want to understand the economics of the application. What drives the costs, performance for something. So, for example, if you're talking about ride sharing, what drives the cost? Well, you got all these roads out there. You got these vehicles. You got these drivers. Congestion. It's a lot about congestion. It's not about the cost of the drivers. It's really about congestion. And the second thing to think about is the technology getting better and how fast? So a lot of people do focus on, well, technologies are getting better. We know we have exponential improvements, but you got to be specific. You got to look really in detail about those improvements. How are those improvements impacting on the application? So again, you look at, okay, is Moore's law helping ride sharing get better? Is there some technological change that's helping it get better? If there is, then okay, we can be optimistic. That was a reason to be optimistic about computers and mobile phones, video game consoles, and a whole host of other electronic technologies in the past. But if it's not getting better and fast, then why are we optimistic about it? Right now, if a technology is new and no one's using it, it's because it's not good enough. So in order for it to be good enough, it has to get a lot better. Is it getting better? So actually, AI, I would say about 12 years ago, one of my students showed me this graph of how the number of errors recording someone's voice conversation and also translations was getting better over time. But actually, it had stopped. It stopped about 10 years ago. It had gotten very, very hard. And I remember seeing this and realizing that, well, this is going to be a lot harder than people think. We think that these transcriptions and all these things are going to work so well, but so you really need 99%, 99.9, 99.9999. You really need highly, high efficiencies, high accuracies to do a lot of applications. So a long time ago, I realized that, okay, this AI, it might work in situations where you don't require high accuracies. Because there are those where it's augmented, and so the human, you just use it to discard things that the human doesn't have to look at. Or maybe you use it to focus them on things. But you can't, it'd be very hard to take the human out of the loop. So getting back to your question, a lot of it is about the economics of the application, but also the rate at which the improvements are occurring.
I like that example, particularly where you talk about the economics and you look at the specifics, and you said actually the problem is congestion. Will the technology solve congestion? And no, it doesn't. That's not its purpose at all. So I think if I take a slightly different lens on it, you really look at the economics, you look at the system that the economics is sat in and what problem it's looking to solve. And is there a mismatch between the problem that's there and the hype, the promise of what this thing will do? And then if there's a mismatch, you go, hang on a minute, you're not solving the central problem, in this case, congestion. And I like that use of the specifier, really getting specific about what exactly is the improvement. And again, another key term I took away from that was the rate of change. How fast are you accelerating this problem solving? And if it's too slow, or if it's stalled, or if it's too optimistic, then you're taking a distance from it.
Yeah. The rate of change is very important, but it gets ignored. People throw around the term breakthroughs very easily. It's constantly, there's a breakthrough in nuclear technology, there's a breakthrough in this, breakthrough in that. And there are a few exceptions where you see the cost of batteries going down, the cost of solar cells going down. So there are some exceptions where people look at these things, but then they make a lot of extrapolations based on that. And suddenly they're not really talking about the cost of solar cells or batteries coming down. They're talking about something else coming down because the cost of solar cells and batteries are coming down. So there's this constant talk about breakthroughs, using that term very loosely. And that's what leads to a lot of the hype.
Yeah. I've got another slight way of phrasing this. Let's imagine that you're on a selection panel for investors. You're looking after a portfolio and you've got people coming in pitching new tech to you. There's dozens and dozens of these folks coming in. You've got a CEO or a founder. They're coming in with a new tech idea. Two things. What are you looking for? And one question would you ask them at interview when they're giving you their pitch deck? They've got their 8 minutes of fame or however long they've got to make the pitch. What are you looking for? And what question would you ask at interview?
Well, there isn't just one question. There's lots of different questions. And you have to look at something from a lot of different angles. And a lot of times people are looking for one thing. And this comes from academics because you get a paper published because you found one thing has a big impact. And it's statistically significant. And wow, isn't that important? When actually, there's a lot of things involved with new technologies. And we have to teach people to consider a lot of different things. So I mentioned two things about the economics of the application and the rate of improvement. But I would also want to know, what's the market size? This is something that gets ignored constantly. You see these articles about new technologies and going on how great they are. They don't mention market size data. This was very different. You go back 30 years, that's the first thing that was mentioned. The market size is this. It's small, but it's growing at this rate. Now it hardly gets mentioned. Another piece of data is, are these startups profitable? So what you see a lot of people doing when they talk very optimistically about new technology. So for example, The World Without Work or Rise of the Robots, these two best-selling books. What they did was they went and they said, here's what the startups are doing. That was one of the criteria. So then if the startup was doing it, then, this was going to happen. The second thing was they looked at, here's an academic paper, what academic papers are saying, what they've shown in the lab. So we're going to assume that's going to happen. But the problem is all these startups are losing money. So you got to pay attention to those startups, whether the startups are making money. Just because they're offering something doesn't mean it's going to succeed. And it's just astronomical, the number of startups that are losing money. And the other thing is about papers. You say, okay, these papers, these academics have shown this in a lab. Well, the problem is, what percent of papers, papers actually lead to some new technology? What percent of products that are discussed in papers, what percent actually lead to something? So there's about 2 million scientific papers published a year. If just 0.00001% of those led to new products and services, we would be completely awash in new products and services. Our lives would just be changed every single day. And we wouldn't be having this conversation because there would be so much happening. But it's not happening. It's not. So you can't look at an academic paper and say, okay, here's what they did in the lab, so we can assume that that's going to happen in 10 years, 5 or 10 years. No, we can't assume that. Just because a startup is doing something, we can't assume that it's going to happen, because these startups are being driven by the same hype that we talked up earlier. They're making these big promises because that's the way you get VC funding. The VCs love these big promises because that's what they're telling to these retail investors, institutional investors, to convince them to invest in their fund. So there's a lot of things, a lot of different questions you want to be asking. You want to get around it. Look at all angles around this new technology, this new proposed business.
That's fantastic. I really appreciate. I mean, I'm actually fishing here on a personal note as well for my business. So I'm getting some really fantastic free consulting here. You give me some really, some robustness to what you need to go forward with. And I had a really interesting experience fairly recently. I was talking to somebody who's a startup advisor, really connected to investment, and we started having this conversation. And I said, "Oh, we're a small company. We've been growing organically for the last 6 years. We're profitable. We're zero debt. We've never borrowed money. We've had some good ideas. We've built when we've got, we've taken a proportion of whatever our revenue is, and we've spun that into innovation. And we're in a really good position now." And she laughed and said, "Oh, that's so Tasmanian that you've not, that you don't want to risk other people's money until you're confident that you've got what you need to progress." And I said, "Well, yeah, I kind of view their money like my money. You've got to be safe to fail and test things out, make sure that what you've got's actually fit for market, and there's demand there." So.
Yeah. Well, she's turned logic on its head. This is a problem. People begin to think that they forget about profits. They forget about market sizes. They focus on other things. And they think that this growth is so important in getting VC funding. For years, I see these articles talking about how, our city or our country is doing so well. We're now a leader in getting VC funding. And it's like, whoa, wait a minute. VC funding is an input, not an output.
Yeah.
You need to have product. You need to have startups producing products that people like. That's another factor I should have mentioned. Is that you want to know, are there happy customers? It could be anyone, right? Because a lot of times you don't know who they're going to be in the beginning. But that's very important. Are there happy customers? So you go back to about 1980 in personal computers, and people were using computers for word processing and for spreadsheets. That was really important. A lot of people looked at it and said, "Hey, this is a big deal. This is a big deal." And it ended up being a big deal. Everybody used it, and it evolved in enterprise software. So we could see the future there. So you want to be able to look at these first applications and to see what the economic benefits are. When people are using something to solve a problem, it's probably because the costs of solving that problem are less than the benefits.
Mm. Yeah, and that certainly lends itself to a great question for an aspiring founder or CEO who's pitching. Demonstrate to me how you're solving a problem for the customer based upon the feedback of what you've put out so far and the progress you've made. I really like that. Just branching out ever so slightly again, I'm still interested in this idea of hype and how people get sucked in, because this absolutely erodes resilience. People put their superannuation, their pensions into all sorts of dodgy things. They believe all sorts of things, or they bring things into their small businesses and they just don't help. They're a sink for money. Tell me a little bit about your perspective on cryptocurrencies and some of that, because it's probably the biggest. It's been described as a Ponzi scheme, but so much of the stock market is, I think. But this has gone to a new level with and even some. I don't know if you've been following the tweet of Elon Musk and McDonald's this morning. Some really quite funny things there. What's your take on cryptos?
Well, great technologies provide value to lots of people, even to the people who don't use the technologies. So consider machine tools, most important technology of the 19th century. Machine tools got cheaper. Factories used them to make things. So manufactured products got cheaper, including agricultural equipment, which then made crops cheaper. You didn't have to buy a machine tool to benefit from them. So this was clearly a great technology. You can make the same argument about Moore's law and semiconductors, but actually semiconductors were not as big a deal as machine tools, because machine tools created the manufacturing revolution. Now, why they got better, that's a different question. They did. There's lots of people who actually analyze this. You can see the performance and cost of these machine tools get a lot because of better cutting tools. So this is the criteria that I use every time. I say, well, does this technology make lives better? So how does crypto make me better? You're using crypto, right? It doesn't. If I buy it and it goes up, I benefit. But if I buy it and it goes down, I haven't benefit. Right? It's a Ponzi scheme. It's gambling. There's no benefit. And now it could be that crypto and what are some of these other terms, DeFi, decentralized finance, blockchain, it could be that these things do have legitimate applications and will help. But the problem is the advocates of these technologies don't tell those stories. They don't give us the details of how it's going to make our lives better, right? They don't go into that detail, right? And that's what the enemy of hype is vagueness. This is what creates hype, is vagueness. You got to provide details. And I have tried to ask people about these blockchain technologies for years. Where is a positive application? I had a guy from MIT 2 or 3 years ago going on about how great it was. His PhD, who worked for IBM. And I said, can you give me a success story? And he gives me a link to the New York Times article. You know, this very vagueness, so I'm not optimistic about crypto. Now, I could change about blockchain if somebody can come up with a new, a good application. But I kind of doubt it, because what has become clear about blockchain has very high transaction costs, right? And that's the issue there, right? In all these technologies, you got to figure out what is the issue. Well, for blockchain, for a lot of these, it's transaction costs. How much does it cost to do a transaction, and how fast? So people do say that blockchain will be faster. Okay. If you can show some application or it gets faster, then I'll believe in it.
If you were looking, I mean, there's two parts to this, and it almost comes down to two very different philosophies in trading. On one hand, you've got the economic traders who look at the underlying fundamentals of companies. And on the other, you've got the technical traders who just look for patterns and speculate. Do you do either? Do you look at the fundamentals, or do you look at technical trading?
Well, I'm not really an investor, because a lot of success at the stock market comes not from fundamentals, not from understanding whether a firm is a concede or a technology concede. It comes from understanding other people and what they're going to do. You look at right now, and I mean, I have known that there was hype all along. So I've thought that the stock market was going to drop for a long time. But that doesn't help people much. It doesn't even help you now, right? Mm-hmm. So people have, I've read a number of articles saying that, we kind of know these stocks are going to go down because they've got no profits, or their price to equity ratios are astronomical. But the problem is, as they go down, they're going to have corrections. They're going to go down some, then go up a little. Go down some, go up a little. They're going to keep doing that. And the people who make money are the people who can figure that out. I don't understand that. If you understand that, there's probably some technical issues you mentioned that's probably important there. But it's also kind of psychology of people. I don't understand that. And so I stay out. If you understand it, you can make money there.
Yeah. I spent a little while a few years ago modeling the stock market, building little robots, just seeing what it could do. I could make a bit of money out of it, but I spent so much time not creating value in my life. Sat at a computer. It was definitely time to give that away. I certainly wouldn't want to do that for a living. Far more enjoyable things to do. I found. So yeah. I've just got another couple of questions now, sort of taking a broader perspective. If you could direct people's attention to something important in the world, what would it be?
Well, I think there's a lot of problems again, and most people tend to focus on the problem that they're trying to solve, and so I can't really claim to be any more objective than anyone else. I certainly have been focused on slowing productivity growth, slowing innovation for years, partly because I think that problem has to be solved if we want to solve other problems. If you want to give people higher incomes, you're going to have to increase productivity growth. If you want to solve climate change, you're going to have to accelerate innovation. If you want to make people live longer, you're going to have to accelerate innovation. Whatever problem you're trying to solve is going to involve, to some extent, new technology. of course, sometimes there are simple solutions that aren't very technological. There's some kind of the big companies are making all the money. They're preventing competition. So a lack of competition is a big issue too. But basically, it's a lot about innovation and figuring out how to do that better.
Have you got any tips for how to? I'm leaning towards, the innovation thinking, the stimulus, getting the right people really motivated to tackle that problem. Got any ideas?
That's not my expertise. No, it's people who hype things are better at getting people motivated, right? So right now, I think over the last few years, everybody has wanted hype. So the people with the most outrageous stories, the most optimistic stories, have risen to power. And it's hard to compete with those people. And it's very hard to compete with people who are, for example, if you want to use AI to improve the productivity of a radiologist, you're probably not going to get funded because the AI people have convinced the venture capitalists that that's not a problem because we're going to replace all those radiologists. So why would you want to increase the productivity of those radiologists? And that type of example is repeated across so many applications where the people with ideas are pushed aside because the people with the hype are being listened to.
Yeah, well, I think you absolutely answered my question there. Really pay attention to some of the specifics, the fundamentals. Listen to people in the service industries, whatever they might be. Radiology is a good example, and see how you can be of service. So innovation, I like that as a direction, a potential focus for people in the world. I certainly am also interested in how I can innovate my business to scale the work that we do. I'm really, every day we get a little bit of feedback from somebody somewhere that says, "Oh, this is fantastic. It's helped my life. I'm no longer stressed. I'm able to work. My kids are doing this. My husband's doing that." Whatever it might be, it's just incredibly rewarding. The challenge we've got is how do we scale what we've got? So we're starting to look at some of the sorts of things you're talking about. But I really like today's conversation and the grounding that provides. And just thinking a little bit about that and where we came in, you've got this 13-year-old Jeff inspired by the moon landings. What are your future aspirations, either in work or elsewhere in your life? Where are you looking to go from here?
Well, I'm still interested in helping students, companies, policymakers think about these things. And so I'm hoping that some of the hype is going to wear off this year. Some people are going to realize that they've been doing things the wrong way and that they need to try something different. So I'm hoping that will give me opportunities. But it's very hard to say. I'm 66, so it's harder. There's a lot of organizations that have age limits, so there's more of a challenge now.
Just hype your age, buddy. Just tell them you're 46.
Yeah.
They're not going to know. They're not. You don't look 66, so who cares? Just tell them you're 46.
Yeah.
Right. Join the hype.
Yeah.
Well, look, thank you so much for today's interview. It's been I've learned a lot, and I think you've given me some really useful insights. I recommend to our listeners, to our readers, check out Jeff Funk on LinkedIn. We've got a link on our website at frontlinemind.com. And enjoy following his blogs. There's a lot of intelligent stuff in there. These are rich articles. This is not just throwaway memes. There's some really genuine nuggets in there. So I'd encourage you to keep posting on LinkedIn. I read them. I find them really useful. I find that they're grounded and well researched and well referenced. So thanks for that. It's a useful resource. So keep going.
Well, thank you. It was my pleasure.
We hope you enjoyed this episode of the Salience podcast. Please leave us a review and subscribe wherever you get your podcasts. You can also subscribe to the Frontline Mind newsletter by visiting our website at frontlinemind.com. Have you got a topic you would like some more salience on? Send us a message on LinkedIn or email team@frontlinemind.com.